Hey everybody, it's David. I'm your host of Highway to Health podcast. Thank you for being here. By now you know, this podcast is meant to celebrate, give a stage, an opportunity to those that are committed to improving the access to care, the experience while getting that care, and of course the outcomes for our patient and provider population. We've got a fun conversation today. You're going to enjoy learning from Spencer Smith of ParetoHealth. Spencer?
What's up, man?
Welcome to Highway to Health.
Great intro.
Thank you for being here.
Thanks for having me. This is going to be a lot of fun.
Absolutely. We're going to get into some fun topics. We've got some cool things planned. But we start every podcast with the same question. You're a fit guy, but you're a busy guy.
Yes, yeah, that's true.
And I like learning from our executives on the healthy habits they've built into their life. We have a responsibility as patients, as people, and share with our listeners what you do to maintain mental, physical well-being.
Yeah, well, that's a great question, man. So fortunately, I have a background in playing soccer my whole life through college. So I think that foundation created the habits where they're sort of so ingrained in my life that it wasn't really a question of am I going to exercise and eat right? It's just a necessity. So I carried those through into my adult life as well. I have a spouse, a wife, Courtney, that's also very active and very fit. And we've actually made it a big part of our life. Cool. So we go to Lifetime Fitness almost every single day. The kids are in tow most of the time, sort of establishing that precedent. And so I would just say that it's sort of a non-negotiable component of our lives because we want to be around for our kids to grow up and grandchildren. And those habits can be, I walk almost every single morning now. I'm in the gym lifting weights 4 to 5 times a week. I played soccer, but I don't love cardio that much. So I try to get it when I can get it. But diet, I think as we age, I'm about to be 42. So as we age, just diet, man. You have to really dial in what you put in your body. Yeah. And when we get into the stuff about healthcare, man, I think that the way that we fix healthcare in this country is fixing the average American's health. That's where it all starts.
I would agree with that. Yeah, we have a responsibility,
absolutely,
an obligation, not just for ourselves, but for the people we love.
Yeah.
Your kids play a big part in that. Mine do too. And then my wife is like, there's a carrot, there's a stick. The wife's more of a stick.
She's
gonna make sure
she's keeping you in line, right?
Yeah. Hey, if she's on the Peloton at 5 a.m., you better be.
Well, I look at it as especially if you have a spouse that's active, I look at it as like a mutual responsibility to other, man. It's like if she's going to be in there keeping herself fit, and obviously as we age, we want to still look our best for our significant other. So it's like I feel an obligation to her to do the same
100%.
too. So it'll never probably not be a part of our lives.
100%.
God willing, right?
I know your kids are a little bit younger, but your oldest one's getting to that age where they're probably starting to play sports and other things, and mine are getting to that age too. You never think of it this way, but when you have habits like you just described, it's not that you have to teach those kids what they should be or could be doing. Mm-hmm. They just see it, and they're almost immersed in this idea, and it's almost natural to them. My 11, 12, 13-year-old, and even our 4-year-old they're usually out there with us. They're in the gym with us, and it's fun to see them with an active lifestyle and enjoying being outside, enjoy being an active person.
Because you start them so early, it will just be part of their sort of ritual every day. It's their habits, right? So they will never question, do I need to eat right, or do I need to go to the gym, or do I need to play sports? Because it's like they haven't really known anything other than that, so there's nothing to teach them because you demonstrated it to them. And that's I feel like from a leadership perspective, that's part of our obligation as parents is to demonstrate how to live.
Not just do what I say, but do what I do.
Do what I do, for sure.
I appreciate you sharing that.
Thanks, man. Good question.
If you could show me or teach me how to get the hair at 42, that would be appreciated.
I wish I knew the answer. My dad's 67 and has a full head of white hair now, so I'm all right. I got a little gray in the beard, but as long as I hopefully hold on to it, that's the main goal,
good.
Man. Thanks.
I'm jealous. But I mentioned in the intro, this podcast is for the people, the organizations that are improving access, experience, outcomes for our patients and providers, but that didn't explain why you're here.
Yeah. Fair.
So tell us a little bit about yourself, a little bit about Pareto.
Yeah. So my role is SVP of Consultant Development, and I won't bore your listeners with the 5 minutes it takes to actually explain that job. But my job, I think in a nutshell, is to amplify the messaging around what ParetoHealth does. So I do a lot of content on my own, have a podcast on my own called Self-Funded with Spencer that I operate every week. And so threw that in there, right? I use that platform, if you will, as an opportunity to hold conversations like this with experts. The idea being is I firmly believe a rising tide lifts all boats. And so if we can educate the marketplace, not just employers, but individuals, to be better healthcare consumers and truly be healthcare consumers and not sort of at the mercy of the system, I believe you can use content to amplify that messaging. But then I do a lot of public speaking, do a lot of sales and sales training, hosting webinars, et cetera. But Pareto in and of itself is what we call a benefits captive. And without going into the weeds there, I think of it as like a community of like-minded employers that said, let's all band together, let's leverage our buying power for better products and solutions, but let's also leverage that scale to diversify risk across a large pool. And so our healthcare and our health insurance spend is far more stable over time as a result.
It's a needed area, it's been a gap. Honestly,
yeah, it's a huge gap
in the history of these types of solutions. So we're going to get into more about the challenges that our employers are facing, even the employees, the patient, and how that can be addressed. So, but I'd like to I'm going to put you on the spot here.
Okay.
So with your time in healthcare, my time in healthcare, we probably have similar opinions, differing opinions on who holds the power, who holds the leverage in this healthcare ecosystem.
Okay.
If I counted to 3, I'm curious to know if we would say the same answer. So
all right.
When I count to 3, you say between the patient, the provider, or the payer, who has the most power in healthcare today?
Okay. All right.
Patient, provider, payer.
Okay.
On 3.
On 3.
1, 2, 3. Payer. Yeah.
100%
right.
payer.
Good.
Yeah.
I thought you'd say the same thing, and I think we have probably similar experiences. Tell me why.
Relatively complicated if you dig into it, but I think having a model where a third-party payer is negotiating on behalf of both buyer and seller, and they have contracts behind the scenes that nobody really is privy to, and they also have entrenched interest through vertical integration of buying providers and owning networks and PBMs. I mean, if you really peel back this onion, it's actually pretty dark. But that model where they're ultimately, I would say, wielding most of the power as a result of that structure leads them to where they have almost unending power in this equation. I think we can dig into how that happened probably, but I think when you just look at that traditional model, and I'll use an acronym I became interested in recently called POSIWID. Have you ever heard of that?
No.
Okay. The purpose of the system is what it does. And a guy named Stafford Beer came up with that. And he was like this systems genius guy that was like focused on how feedback loops work and organizations are arranged. But the purpose of a system is what it does means whatever the outcomes that are happening, well, that's what the system is designed to do. And so he would argue that, it's kind of foolish to then lament the fact that the system is not delivering what you want it to do, because that's not what the system is designed to do.
Yeah.
And so I say all that long-winded way to say that those publicly traded entities that hold most of the power have also established and enshrined a system that is delivering higher costs over time and subsequently more profit for them.
They also have some just unfair advantages.
Yes, they do.
One of them being data. I mean, our providers usually have deep expertise, knowledge, data on a very narrow sliver of our patient population.
Yep.
And it's usually within their community, right? Payers have that too, but then they can go far and wide and understand trends. They can anticipate better, and then adjust, evolve,
acquire,
and even strategize and acquire. Yeah,
yep.
Another good one.
Based
on what they know.
I think it's data, but it's a lack thereof, right? So ultimately, the business owner has an obligation to receive their data. So let's call them a plan sponsor, especially in the world of self-funding. But the system and the partners that they use sometimes will limit almost completely the access to that data, or they will parse it out and not give them the full scope of what's going on. And when you're an employer trying to deliver better outcomes to your population, yet you have absolutely no data to make decisions or see what's driving your cost increases, well, who has the advantage there, right? It's the one that has the access to the data. And so I would argue, and legally speaking, especially when they're self-funded, they should get access to their data. And you're seeing some litigation around that right now as a result. And so I think that keeping them in the dark has also trained the buyer to just sort of accept really poor outcomes as status quo and think there's nothing they can do about it. And so that control, or the lack of control over the data, becomes a huge inhibitor.
Yeah, I agree. I also think there's an opportunity for providers to work better together.
Yeah.
That's not something that they all see each other as competitors, understandably so. We're all businesses. We all have patient acquisition is a real challenge sometimes, and patient retention is an even bigger challenge. But so it's natural for these providers, especially in a big community like Dallas or DFW, to see each provider as a competitor. But man, there's power in collaboration, and to understand, just like what you guys are doing at Pareto for employers, there's an opportunity maybe for these providers to collaborate 100%. And join forces together.
Well, I don't think it's an us versus them or an either or. I think it's both sides of the equation, the delivery side and the insurance side. The employers sit in the middle of that. But I think all stakeholders should have a seat at the table, and we should all be driving towards optimal outcomes for the patient or the individual. If everybody had them as the sort of the first and foremost obligation, then I think the system would be better. But right now there's a lot of finger pointing that's going on.
Oh, 100%. Yeah. And a lot of it comes from the patient, right? Well, it's the provider's fault, and then it's the payer's fault, and then it's just this never-ending.
Well, think about from an individual. Most people think, oh, my insurance covers that, or like Ozempic's a great example where everybody's demanding that GLP-1s be covered by insurance. What people don't understand is everything that you add to the list of things covered by insurance means the cost of insurance goes up over time. And so we've taken something that was supposed to be for like large unknown risk, and we've turned it into the way that we pay for routine, regular recurring risk. That's not what insurance is designed to do. So the more you fold up into that, the higher the costs go. And when people are just demanding more and more things to be covered, well, as a result, things cost more.
Yeah. Cause and effect. You mentioned employers kind of live in the middle of this.
Yes.
What kind of leverage do they have? What kind of leverage could they, maybe the opportunity that they have to gain some of this leverage? You mentioned data, but where else?
Well, so I think they actually don't realize how much leverage they have, but the point is they have to make a different decision. Going back to the purpose of the system, what it does, right? Well, if you're getting the outcomes that you don't want over and over again, well, what choices do you have? You either stay there and kind of complain about it and accept increases, or you explore a different model. And so whether that's self-funding, which is all that is an employer now taking the onus of paying claims onto their plate and buying a catastrophic type of insurance called stop loss, or something like we do, which is a version of self-funding for the small to medium-sized market called a captive. There are absolutely options out there that exist, and it's just a matter of raising the level of awareness, asking the right questions, and then a lot of the employers will procure their solutions through insurance consultants. And so it comes down to, do we ask our consultant the right question? Are they bringing us these options? And if not, why? And that's a different topic we get into, the incentive model. But ultimately, the consultant has to lean in and start strategizing better on behalf of the employer. But I think if the employers demanded better of their consultants, then the consultants would be bringing the right solutions to the table.
Man, the consultants have a big job.
Yeah, they do.
And you've had a lot of them on your podcast. And the consistent theme of the ones that I know and the ones that seem to be doing things in a really good way are the ones who see themselves as a guide, as an educator, as somebody who's, leading to a solution, not leading with a solution.
Oh, yeah.
And we need more of that.
Well, and I think even at Pareto, we'll differentiate between broker and consultant. I think most people know what a broker is, but I think that term is simply just somebody that's shopping insurance on behalf of, whereas a consultant is actually looking at the specific use case of the employer, what are their actual problems, and then bringing, like you said, a solution to those problems to the table, but not just sort of shopping on their behalf, and then what we call an apology tour every year where they come back to the table and go, sorry, I got your 14% increase down to a 9, it's the best I can do, and then I'll see you again next year. That's a broker, and I think that version is outdated, and I think the industry is demanding better. And so you have to truly be a consultant now these days to be competitive, at least.
I've overused this phrase or this term on this podcast, but every time I have a conversation like this, it proves to be true. It's going to take a village if we want to get to where we want to go in this healthcare journey of ours. We've talked about patient, provider, payer. We've talked about broker, consultant, employer. And the truth of the matter is we all have a responsibility, we all have an obligation. We've all got to do our part. And the better we understand that, the more we work together, maybe the more positive outcomes we can realize.
Yeah, I would agree with you.
Value-based care is something that is drastically changing the healthcare landscape. It's something we've talked about for a long time. In my background with revenue cycle, it was 13 years ago, we were already talking about value-based care. We're starting to see some of that take hold, and actually some of these models being implemented. How does value-based care change the way or impact, an employer that's considering being self-funded?
Can I ask you, what is your definition of value-based care?
So in a perfect world, value-based care is meant to help providers deliver the kind of care they got into the industry to deliver, to render.
Yeah.
In a practical world, that's probably not true.
Put you on the spot. Yeah.
In a practical world, what I think it means is they're going to have to really contain the cost of care so that they can maintain the margin to keep their door open, which then ultimately is going to impact the experience and the outcomes for the patient. And that's what I'm worried about.
Okay. My problem with value-based care, and I'm not against it, is who's determining the value? Who's establishing what is value? And then how do you overperform on delivering that value? So what are the metrics to over-deliver on that? I would like to see providers that are in that model at risk, meaning if they over-deliver, they have the ability to actually make additional money, and if they under-deliver, then they put some of their fees at risk as well. So when you think about the notion of aligning incentives, as long as those particular incentives are aligned, then I'm cool with it. But I think there are other models that exist that might deliver that even better than what I would think of as value-based care. And so I'm sort of a little skeptical, and that's just my opinion. Because I think whether that be like a direct primary care model, you got advanced primary care, which does add fees at risk. You can have multidisciplinary primary care, which is adding other specialists into the fold. The whole purpose of primary care is to be the foundation of a healthcare journey. And rather than being a feeder into the system, it should prevent as much as possible going into the system. And a lot of that comes down to health and what we recommend. But until we sort of fix all of those incentives, I don't know if we're exactly going to get the outcomes that we're wanting.
I couldn't have said it better myself.
Okay, cool.
The second thing I'll add to that, though, is the risk side of things is obvious for the provider, right? And you talked about overperforming or underperforming.
Yeah.
But the other side of that risk is attribution. Like you mentioned, multiple specialties. Oftentimes, multiple specialties are included in the same case of care or episode of care, and then who is attributed the reimbursement and at what percentage for that same person, that same case, that same episode of care, that care journey. Until we get that stuff figured out, it's a big concern, and further explains or details why providers are so worried about adopting these models more and more.
But it's still, at the end of the day, and I don't want to hammer this too much, but it's still a sick care model. I mean, I don't know if you've watched have you watched the recent podcast that Tucker Carlson did with Casey and Callie Means by any chance?
No.
Oh my God, you got to watch it. I mean, this is a great show. But that is probably one of the best healthcare individual episodes I've ever seen.
So 2 plugs.
2 plugs, sorry. Yeah, and I have no financial incentive to that podcast, okay? But it's just that good. And it's really talking about all the perverse incentives that exist and like how very little information folks that go through medical school, how little nutritional guidance and education they're getting. They end up sort of following the allopathic medicine model of just prescribing drugs as the first blush of any symptom. And it's like, it's not healthcare. It is absolutely sick care.
Yeah,
and as soon as somebody gets sick, you can keep them on that assembly line forever, and they're a profit center. And it's kind of gross, but that's what it is right now.
Yeah, and we see it. I mean, we see it more and more, especially when I was exposed to it most when I started having kids, and they started getting to that age that, they're seeing the doctor more. I'm getting older, so I'm seeing the doctor more, and I think we're all feeling it right now. And the good news is, with people like Tucker Carlson and these people having these conversations, is hopefully the exposure helps.
Why? I mean, and this is the timing of this episode's good. I mean, healthcare is at like literally top of everybody's mind right now.
Yeah.
I think, like, from a policy perspective, and I won't get into politics, but I think we're going to see some pretty big changes come down the pike as a result of that.
I do too. I had a guy on recently that talked about single payer model and all of those concerns. And long story short, it just adds more responsibility to us,
Yeah.
the individual, the patient. We've got to take care of ourselves. That's why I start every podcast with that question.
Yeah, it's a great way to start.
Because it's something that you got to control what you can control. And luckily, through diet, exercise, and these other things, knowledge, we have an opportunity to do that.
Mm-hmm.
What are some common misconceptions about being self-funded? There's,
Okay.
Value-based care presents risk to the patient or to the provider. A common misconception, or maybe real perception of being self-funded, is the risk that the employer takes on. So I'd like to talk about that. Do you get questions or concerns around like access to care by their employers or employees when dealing with an employer?
Well, I'd say I'll even take a step up and say the most common misconception about self-funding is you hear that term and you think all of the obligation is on me, the employer. I'm self-funded and therefore I have no insurance at all. I mentioned earlier this thing called stop-loss insurance, which is a catastrophic form of insurance in case somebody gets very sick or we have more than expected overall plan spend. So yes, they're self-funded, but most of these employers that are self-funded are partially self-funded because they purchase that insurance. So I just wanted to dispel that misconception because that's a scary term, like, oh my gosh, I don't have insurance anymore, and that's just not quite the case. But access all comes down to what does that employer want in terms of an outcome from the plan. And so when we think about, especially when somebody comes into Pareto, we think about, well, where are they today in their sort of healthcare transition? What do they want the plan to look like tomorrow? And then what do they want it to look like 5 years from now? And so they can follow a crawl, walk, run model. And so I say all that to say access could be exactly the same. You mentioned United Healthcare earlier in a conversation. If somebody wants to use UMR as their administrator and have access to United Healthcare network and use Optum as their pharmacy benefit manager, to the individual, there will be zero disruption in access, and they probably won't even know that their employer has self-funded. You can do far more innovative things than that model, but if somebody's just, I want to go self-funded first and then derive all the benefits down the road, that's a way to do it where there's zero disruption and there's no inhibiting access or anything like that. I still think that's a misconception in the first place.
It wasn't me.
I can't get access because my employer's self-funded. That's just not the case. But I think that's a way that you could have no noise at all and then over time progress as a plan sponsor. Yeah.
That's good to know. What about quality of care?
Yeah, same thing. I mean, it is the same thing.
All right, so let's take it. Let's say.
But I have some nuance to that, but it is the same answer. But I wanted to say there's also actually an inverse relationship most of the time between cost and quality. People presume that if I pay more for healthcare, that the quality's better. It's usually the opposite. Okay, so there's I'm going to point up the street, but at Oklahoma City, I'm going to point up the street.
It's not far. I might be able to see it from
up
here.
This highway.
Yeah.
Dr. Keith Smith, I've had him on my show. Brilliant guy, has the Oklahoma Surgical Center. And he does a bundled surgery model where you come in and get your knee replaced at his facility. It's 100% one flat rate for everything from pre-op, anesthesiology, the actual operation, the device, and post-op care. 100% is going to be one price, regardless of if there's complications. And he is by far cheaper than any other option in the state. And his argument is that my cost staying the same over a decade is proof that my quality is better because I can still make money at that price point, but I've operationalized it so much that the outcomes are almost always good or great, yet I'm still delivering it significantly cheaper as well. So that the quality component, again, I would dispel that almost on the surface as a non-issue.
I'm glad you said it because it's true. The old saying is you get what you pay for. That's not always the case. It's very rarely the case in healthcare. It's really just where you go. That's
where you go. I mean, and this comes back to the payer. Same location, same doctor, same procedure, same facility, 4 different prices for the 4 different big carriers. Nobody can tell you why that's the case and why usually if you pay for it in cash, you pay less than those payers have negotiated with their scale to be able to provide.
100%. Which leads into my next question, overall cost, for the employer.
So no guarantee if you go self-funded that you will save money in any individual year. That's sort of an understood thing, right? There is some risk involved. This is risk management and mitigation. But on average over time, as one of my mentors said a long time ago when I learned about self-funding, on average over time, it's almost guaranteed that you're going to save money because now you're removing, carrier profit from the equation. You're removing all the limitations of choice of vendors that you partner with. Removing some of the contractual limitations that exist that prevent you from doing the things you want.
Yeah.
And then by actually managing your own plan spend and having access to the data that helps you do that, then you can target where your problem areas are and actually address those things. If you bundle it all into this fully insured model where it's just premiums all you pay and that's all you see, then you have no idea what's actually going on under the hood, and oftentimes your risk is being used against you.
So tell me this. I mean, there's people listening that are going, okay, I'm starting to understand it. Risk isn't, we deal with risk in everything that we do every day. It's just, what are you willing to accept? You mentioned small to medium-sized businesses earlier. Dig into that, double-click on that. Yeah.
So what I would define as a small to medium-sized business is small on the small end is around 50 enrolled employees, and a medium-sized business might be upwards of 750 to 1,000 enrolled. These are more self-funded designations. The small group market, I think technically in the fully insured world is under 50, and large group is over 50. But when we sort of delineate that segment, which is really the middle market segment, which is there's 250,000 businesses in the United States in that size segment. That's an underserved part of the market, and so these business owners traditionally have not had access to self-funding in a way that was predictable and stable. Pareto and the captive itself is the answer to some of those preventative reasons why people wouldn't self-fund when they should have been self-funded a long time ago.
Is there an ideal demographic makeup of those 50 to 750, whatever the size? What's the ideal demographic makeup?
Believe it or not, there isn't actually it could be manufacturing, it could be tech, it could be trucking, it could be healthcare delivery. I mean, there really is nobody that in an industry necessarily is a complete non-starter. It comes down to what is your willingness to do something different? What is your ability to sort of manage risk, your risk tolerance? Some of your actual risk profile, meaning your actual claims experience. If your company is just running horrendously year after year, this is not like a silver bullet solution where everybody just gets a perfect outcome. And so there will be individual employers that just it doesn't make sense. Maybe it doesn't make sense this year and we'll look at it again next year. At the end of the day, we still have the same competitive challenges that everybody else does, and it has to be reasonable, the terms that are put forth on the table. But I think the concept, it's very rarely that we'll deliver the concept and it not connect with an employer. And then we start getting down to the numbers and stuff. Ultimately, it does have to make sense.
So we've talked about a lot of things today. For our listeners, if we can narrow it down, if there's one thing that they walk away understanding, they walk away knowing, and they could tell their wife when they got home. What's that one thing that you want them to know?
I think, honestly, there's hope. And I know it sounds kind of cheesy to say, but there is hope.
It must be an election year, man.
There's hope. Hope and change, right? But honestly, I've been in this industry 15 years. I've seen a lot. I haven't seen it all, but I've seen a lot. And I am so passionate about this subject because I know it works. And I know it delivers the outcomes that employers are looking for. And so all we really need to do now is, one, demand better. Two, be willing to lean in, and this is usually the second biggest line item on an employer's P&L or their budget. And they buy it super unintelligently versus every other piece of their business that they manage. And so it really comes down to choice. I know I have not been getting the outcomes that I want. If I keep doing the same thing, what do I think is going to happen in the future? I'm going to get the same outcomes or worse. So comes down to, if you believe in optimism, I'm a white pill kind of guy. I wake up every day and take the white pill and believe in hope and that we can fix these things. I really do think we can. But enough business owners have to make that decision for themselves. Enough consultants have to make the decision to lean in and actually do something better. And ultimately, individual people need to demand better in terms of healthcare in the U.S. And if we do those things, I think we'll prevent the pitchforks, and I think we'll actually have a better system, or a better alternative system possibly in the future that will do what we want it to do.
Education is the key to all of this. Yeah. I mean, the patient has to be better informed, better educated. That's a responsibility that they have to have. True. When choosing where to go and who to, their personal healthcare needs, employers are the same, but at a multiple, right? Because of the number of lives that they're impacting and in some ways responsible for. So there are people, there are organizations out there ready to share, to educate, to engage. Go find them. Yeah. Pick their brain, learn from them and with them, and then make the right choice for your business. Yep. But in the age of education, in the age of information that we live in right now, ignorance and uneducated guesses have big impacts.
There's too much access to information nowadays, so if you don't know something or you remain ignorant, it's kind of a choice at this point. Yeah, I would agree.
I appreciate you being here.
It's a pleasure, man. It was fun.
You're welcome back anytime.
All right, let's do it.
All right.
Thanks, Dave.
Thanks.